I will often have clients ask me, why does it matter where my down payment comes from? What's the big deal? As long as I show up at settlement with the cash, does it matter? Oh, yes, it does. The whole point of having a mortgage borrower put a down payment down is to know that, hey, this is their hard-earned cash. Or it could be gift money, which is acceptable. That's not necessarily hard-earned cash, but it's somebody's hard-earned cash. And there's just rules to know where did the money come from and is it from an acceptable source. So there might be things that are acceptable but are complicated. I had somebody once that sold an antique guitar collection, but they didn't have receipts. They sold some on eBay. They sold some to a friend. They sold some on Craigslist, and no bill of sales, no receipts. It was a mess. We found a workaround, but that was difficult. So keep paper trail on everything. Cryptocurrency is something that's becoming an issue today. You can use cryptocurrency, but the problem is a lot of the cryptocurrency account holders, a lot of the cryptocurrency institutions, I should say, they don't provide proper bank statements. Coinbase, for example, I've had clients send me a screenshot of their account balance on Coinbase. Okay, that doesn't help me. It doesn't have your name. It doesn't have an account number. It doesn't have your address. It's just not formal looking. It's something you could have whipped up on your computer with a couple of software programs. So while you can use cryptocurrency, the bank account statements aren't formal enough. So I tend to tell people for now, time being, stay away from using cryptocurrencies. Hopefully at some point, these cryptocurrency institutions become a little more formal and give you more formal account. I have a small account at Coinbase. I've never gotten a monthly statement. I have nothing formal. Makes me a little uncomfortable, but that's something to consider. Also, I'll have people that will say, I'm getting a loan from my family. Okay, well, you can't get a loan from your family. You can't borrow money to borrow money. You can't get a 20% down payment from your family that's a loan to then go get an 80% loan from us. That's a 100% loan. Now you can have your gift giver fill out a gift letter that says no repayment is implied nor expected. It's a gift. It's got to be seen as a true gift. Now, somewhere down the line, if you want to give them that money back, that's your own business. But the money has to be represented as a gift. If you sell the house and you make a bunch of profit and you want to give them their money back partly or completely, that's your business later. So where your down payment comes from is really a critical part of underwriting a loan. I've had people that say, oh, I'm going to cash advance a credit card to cover my closing costs. That's borrowing money to borrow money. That's a no-no. You can't cash advance a credit card. So if your assets aren't in a very stable account, they've been there for a while, if you've got some creative things going on, better have a conversation with your loan officer before you go for mortgage pre-approval or a mortgage approval and you get under contract to buy a home, to make sure that you're not going to get sidetracked in the middle of the transaction and have you be told you can't use that asset, and then maybe it's a problem. So think that through carefully. Thanks.